In Call the Wild, will the Fed's housing policy ignite inflation? Let's bring in Bob McTeer, CNBC contributor and former president of the Dallas Fed. Also CNBC's Rick Santelli. Rick, I know you've been concerned about this. What do you say? I mean, are we looking at inflation down the road as a result of printing all this money? And if so, what can be done?
You know, I think our Fed officials and our Treasury Secretary are very disingenuous about what inflation is. Inflation isn't the prices showing up at the pumps or OPEC or even on some of the products you buy. Inflation is a policy where you print more money. Are we in a policy where we're printing more money? Yes.
Well, Rick, if we're not actually seeing it show up anywhere.
No. But see, that's the point. Inflation isn't a single point in time. It's a series of events. It's a process. The process has started. If I put a garden hose in your basement window and you're sitting in your living room, does the flooding start when your chair gets wet? No, it started with the first drops in your basement. When you see it isn't necessarily when it started.
That's a hell of a metaphor. That's a heck of a metaphor.
It is a good one. Our former Fed official here, Bob McTeer, to comment on this metaphor that Rick just brought in about the basement flooding. I mean, do you think that we're really running the risk here by printing all this money of some serious inflation down the road?
I think it's not inevitable. It may happen, but so far I don't think the hose is on that much. The Fed's balance sheet peaked last December, almost 6 months ago. M2 growth, 3-month moving average is only 5%. 12-month moving average is only 8%. There's just not that much money being created in recent months.
Well, they put $1 trillion in, all right? They put $1 trillion of the balance sheet, and that created about $650 billion of M2. What's so interesting here, Rick Santelli, the money's not really being put to work yet. The money is there. It is possible you could raise the inflation rate, let's say, to 3% next year. That's about as worse as I could see it. But Rick, they're sitting on $900 billion of excess reserves. Now, it seems to me when those excess reserves are put to work, there's your inflation problem. But so far they haven't been. And might it not be a very slow process? That's your garden hose into the living room.
Yes,
that's
true.
what I'm looking
Larry,
at.
you're dead on, and it's the same conversations I heard before the credit crisis hit. Oh, credit's cheap, but the market and the derivatives are spreading the risk over so many. And then in a digital fashion one day, it came home to roost. If we wait till you and I aren't debating whether it shows up in the numbers, at that point, it's too late. Think Volcker, think the 70s.
So, Rick, would you turn off the spigot right now? Would you say, okay, that's enough, we're not going to print anymore? And if so, what would happen to the economy at that point?
Well, you know what? We're all trying to debate. What is wrong with this rally? Why don't people believe it? Because it's a confidence rally. They took it away in September. It's coming back. I think it's superfluous to everything else going on in the economy.
But I like the rally. I believe in the rally. I believe in the optimistic case, Bob McTeer.
But the point here is, if you took the downside away in September when they really cried foul too loudly, the same could be true about the inflationary expectations.
But you could say, Bob McTeer, that the Fed has done a pretty decent job, all things considered. There are always risks. There are risks that they're monetizing the deficit. I wish they'd quit buying treasuries, okay? I think that's a lousy idea. On the other hand, they may be implementing a slow exit strategy. Productivity may rise in the early first year or two of the recovery. That's anti-inflationary. And, Bob, that leaves us with the U.S. dollar. The dollar is off a little bit from its peak, but it's still above a year ago. Those are your inflationary components. Why do we have to think that everything is going to go in the wrong direction? That's, I guess, what I'm asking. Why, Robert McTeer? Sometimes we get it right. Sometimes we luck into it, for heaven's sakes.
Yes, and this may well be one of those times. I agree with you, Larry. There's no point looking at the dark side of everything. Let me just say on printing money and the treasuries, anytime the Fed buys anything, it creates new money. And the question is, how much is it creating? Is it creating more than the economy needs? And right now, it's not.
You know, that's an excellent point. So if it's not creating more than the economy needs, then do we need to be worried about inflation?
Energy prices have to go to 150. The inflation rate has to go way up because
you're confusing the issues again. A year ago, when the dollar was higher or lower, that's when oil went to 147.
I understand.
That's a dollar effect. That isn't a printing effect.
To me, the dollar is the absolute pivot on the inflation thing.
Right, and who's watching out for my dollar?
I just have to say, all things considered, we are poised for an economic rebound. That's the message of the stock
market. Get ready
market.
to slam
Why can't we accept a little
when oil
optimism?
goes to 100.
All right. We're going to rein it in here.
It's not a sin. It's not a crime to be optimistic, Trish.
But some excellent points there from Mr. McTeer. Bob, you were saying, of course, that if the economy needs it, then we don't need to be so worried about inflation if there's room to absorb all that right now.
Yes, well, Larry had it right. The banks are hoarding their excess reserves, so there's a spike in the monetary base, but there's no spike anymore in the money supply.
All right, we got it.
All right, thanks so much, guys.